Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Shares gain in Asia after tech stocks rebound from the sell-off that roiled global markets. Traders turn their focus now to today's Fed decision, looking for clues on a possible rate cut in March. Seeking deep answers on DeepSeek, Bloomberg learns that Microsoft and OpenAI are investigating whether the Chinese startup obtained OpenAI data without authorization. We bring you our scoop. Plus, LVMH sales fall as customers tighten their purse strings, casting doubt on a luxury rebound. We also bring you further and fourth quarter earnings from ASML in the next few seconds and look ahead to results from Meta, Tesla and Microsoft. Happy Wednesday. We are checking European futures after a day in which US stocks rallied, pairing much of the losses that came through, of course, on Monday and reassessing again the investment thesis for AI. But there was positivity across the US session yesterday, with the S&P gaining around 0.9% and the Nasdaq 100 gaining around 1.6%. Nvidia alone rallied just close to 9% by the end of the close. European futures pointing to solid gains on the handoff then from the US to the Asian markets, currently pointing higher by 0.7%. The FTSE 100 here in the UK looking to add just 8 points, so a slightly less positive picture for the UK. But nonetheless, after European stocks punched through fresh record highs yesterday, you're looking at further gains today. S&P futures currently pointing to the upside of about 0.1%. Nasdaq 100 futures looking to build on the gains of yesterday, pointing higher right now by 74 points, with the focus, of course, shifting arguably from DeepSeek to the earnings of Meta and Microsoft, Tesla later today. Let's flip the board and look cross-asset then. The focus on the yield curve, of course, given what we could expect from the Federal Reserve, fully expected to hold rates at the meeting. But it's what Jay Powell says about the action ahead that will be scrutinised, of course, by traders. 452 right now on the benchmark 10-year, 104 in terms of euro dollar, currently up 0.1% after the dollar gave up some of the gains of yesterday. Brent, $77 a barrel, 31 cents, down 0.2%. And the yellow metal gold currently down just 0.1%, but relatively stable ahead of that Fed meeting. Will Jay Powell suggest that March is still on the table for this Federal Reserve? 2,760 per troy ounce. Let's get you the breaking lines coming through from ASML, the Dutch-listed maker of the equipment that is essential to the build-out of the most innovative semiconductors. And for the fourth quarter, and this is the key line, bookings coming in at 7 billion euros, smashing the estimates of 3.5 billion euros. That is a blowout number for ASML in the fourth quarter. Net sales, meanwhile, coming in at 9.26 billion in the fourth quarter. Net sales, 9.26 billion euros, again, above the estimates of 9 billion euros. ASML still sees 2025 gross margins of 51 to 53%. At the high end of that range, above the estimates, and comfortably so, of 52%. The stock is down about 18% over the last 12 months. This is going to be a stock to watch for you at the open, 8 a.m. UK time. We're going to get more details on this story through the show, of course. ASML, top line for the fourth quarter, a pretty strong beat. What proportion is going to China? What are they going to say about DeepSeek as well, executives on that call? Let's do a deeper dive into the tech-led rebound in markets following a sell-off that shook global markets. Of course, this as traders turn their attention to the Federal Reserve's rate decision later today. They will stand pat. That is the expectation. For more, let's bring in Bloomberg Live strategist Mark Cranfield. Mark, we know the decision from the Fed. What from Powell are you going to be listening out for?
Well, traders are pricing for 2 rate cuts this year, and obviously they'll be looking for any guidance to reassure them that they're on the right path in that direction. And as you were saying earlier, March seems like a candidate for the first cut in the sequence, and probably one more in the quarter after that. But there is definitely plenty of ambiguity around that, particularly given the inflation outlook. People are looking at what Trump has to do in terms of spending, how lower taxes will feed into that. So people are quite concerned about whether inflation will tick up again and whether it will affect the Fed's outlook. So certainly any wording around how the Fed feel about that will be very important for traders. They'll also want to know more about quantitative tightening. It's been going on for a couple of years, and yet the Fed have been very quiet on what they're going to do when it ends, which is pretty important, especially for the short-term trading of the bond market. The repo market heavily depends on where the Fed is and their relationship with that market. So if they're going to be withdrawing even further without any guidance of what that means, it's a bit confusing for bond traders. So there have been several people saying that the Fed need to address that, and it may well be done during the press conference from Jerome Powell. But anyway, regardless of that, it's definitely going to be very important to see whether the Fed is in line with the market for 2 rate cuts, or whether they're going to go even further or be a bit more hawkish than expected.
Okay, interesting. Yeah, now fully priced, as you say. 2 rate cuts fully priced by these markets. We'll see if that adjusts after the press conference today. And interesting that you bring in the question of quantitative tightening and whether indeed Jay Powell and co address that point as well. Let's move it on as well, because it's a big day, not on the macro as well as on the macro, but also on the micro, and it comes to the earnings out of the tech front. What are you going to be looking for when it comes to these tech earnings? How much of a focus on DeepSeek, what we hear from executives there, whether indeed the growth that has powered Mag 7 is going to be continuing?
Well, it sets up a very interesting situation. So already, this week, Bloomberg have done some analysis to say which single stocks are the most powerful in terms of moving markets generally. And of the 8 most powerful in the world, 4 of them are reporting this week. So Microsoft, Apple, Tesla, and Meta are 4 stocks who on their own are big enough and they're volatile enough to shift the whole macro stance. And they're all coming in the next couple of days. So markets will certainly be on edge because of that. Of those, Tesla tends to be the most volatile on a very short-term basis. So that is the one that could have a spillover right into the markets tomorrow. Asian markets often respond, particularly with the Nasdaq futures, which are open during the Asian session. So Thursday morning is going to be very lively in Asia. You've got the Fed decision coming through, plus you've got late session trading from people such as Tesla and Microsoft as well. So that will be a big influence for what happens in Asia. Then on top of all that, you've just had the ASML numbers which came out. And as you say, they were a huge beat, which is going to give European stocks a big boost before we even get to the US data today. And everybody also will be asking the question, what is your strategy in relation to DeepSeek? So whether or not these companies have very clear guidance, they will also need to answer those questions on how are they going to respond to the potential for a much cheaper universe in terms of AI products. And are they part of it or are they on the outside? These are questions investors will want to see answered. And if they can't be, it may well hit their stocks.
OK, great setup, great preview for us of both the Fed and those tech earnings from Bloomberg ASML'S Mark Cranfield, who, along with the team, will be very busy, it sounds, tomorrow morning, Asia time. Mark, thank you. Now, Bloomberg has learned, staying on that story, that Microsoft and OpenAI are investigating whether Chinese AI startup DeepSeek obtained unauthorized data output from OpenAI technology. For more, we're joined by Robert Lee, senior analyst at Bloomberg Intelligence, who's been tracking all of this for us. How significant, Rob, in your view, is this development?
OK, well, the thing that really surprised the markets and also, tech companies in the US over the last week or so has been DeepSeek's disclosure in a paper they published in their website that the training costs on one of the latest iterations of their model was as low as, or just under $6 million US. So that's approximately, 50 or so times less than the big US tech platforms. That's what's caused the upset. But today's breaking news, and obviously, the US is the leader in global AI at the moment. DeepSeek's been name-checked by the president. The US doesn't want, any country or any company, especially a company coming out of China, eating its lunch. So there's been a great deal of scrutiny on these, this claim of $6 million cost. I think, as I've said previously to you, our knee-jerk reaction is we know that there is no reason to fundamentally question what DeepSeek is doing, but have they been cutting corners? OpenAI does allow developers to access their models to use in their external apps for a fee. So the allegation is that DeepSeek has been doing this to cut corners and potentially boosting the performance of its model. Again, this is an allegation at the moment, but obviously it's been taken very seriously at the very highest levels of government in the US.
Yeah, certainly. We're hearing that from members of course, the Trump administration, as well as reportedly Microsoft and OpenAI themselves. So those, and you nod to this, the geopolitical tension and kind of rising around this, and the fact that Trump himself name-checked DeepSeek earlier this week in a speech. Look, we've seen efforts to ban TikTok. Is DeepSeek safe in terms of facing a potential ban in the US?
I think worst case scenario, yeah, that remains an option. It's obviously still early days into the story. You know, they need to do their investigation, see what evidence there is or not. But, you know, if you cast your mind back, only about 2 weeks or so ago, we saw the Department of Defense in the US blacklist Tencent, China's largest listed technology platform. And obviously the ongoing TikTok saga, although that looks to be potentially resolved if a US buyer can be agreed upon. But again, you know, the US is the global leader in AI at the moment, both in the hardware and software side. China has successfully narrowed the gap. But, you know, the US is not going to allow this company to impinge on its territory. And I think, you know, at worst case scenario, we could see some sort of restrictions put on DeepSeek access in the States, and at worst a ban. So that's a distinct possibility.
OK, Rob Lee, our senior analyst at Bloomberg Intelligence in Hong Kong, who has always had the finger on the pulse of this story and will continue to bring us analysis, of course, as we get more information about the future of DeepSeek. Now, still on technology, Bloomberg has learned that Apple has been secretly working with SpaceX and T-Mobile US to add support for the Starlink network in its latest iPhone software. In an under-the-radar move, the smartphone's latest software update released this week now supports the technology. The initial version of Starlink is exclusively for texting, but SpaceX and T-Mobile have previously said they plan to expand into data connections and voice calls in the future. To the earnings story in Europe now. Fashion and leather goods sales at LVMH fell in the fourth quarter, casting doubt on prospects of a quick recovery in luxury demand. But CEO Bernard Arnault remains upbeat for this year. Bloomberg's Angelina Rascouet joins me now from Paris. Angela, talk us through what stood out to you from the overall results as we scrutinise luxury and whether or not things are starting to turn around. What stood out to you from these numbers?
Yes, hi Tom. Indeed, I mean overall it was a slight beat, and crucially it was a slight beat on the fashion and leather goods unit. But I don't think it was enough to wow investors. Investors had become accustomed in the past few weeks to strong beats, notably from Richemont, where the Cartier owner really surpassed expectations because folks were basically spending on hard luxury, on jewelry pieces. At LVMH, we also saw that their watch and jewelry unit did better than expected, with Tiffany notably rising 9% in the quarter. So that shows you that actually that segment of the luxury market is doing relatively well. So we'll see how the markets open.
OK, and meanwhile, we've been writing this up as well. Billionaire founder, of course, owner of the business, Bernard Arnault, talking about his experience in the US, comparing the US to Europe, or specifically to France, your home. He was at the Trump inauguration. He had pride of place at that event. What's he been saying? What's Bernard Arnault been saying about the difference between the US and France?
Yes, indeed. Bernard Arnault, he came back from the inauguration and he said, you know, returning to France feels almost like a cold shower after the optimism that he had seen, that he saw last week in the U.S. since and maybe generally since the Trump election. He said that the fact that France, you know, here the talk is about raising corporate taxes. You know, you're seeing unemployment rise, whereas in the U.S. it's all about trying to unleash, to help businessmen and businesswomen get on with their business. So I think there was a sense of course, of disappointment, and the compare and contrast was pretty brutal for him. We also spoke. After the results, we also asked him about his relationship with Trump. He said, "I've known him for a long time. He's known every U.S. president since Ronald Reagan. Personally, he's got an acquaintance with Donald Trump." He didn't really expand on that, and we asked him, had he spoken about, the possibility, the threat of tariffs on the luxury goods, he declined to comment on that one.
Okay, yeah, it's a nice piece of colour. It's well worth a read on the terminal and on Bloomberg.com. Angelina Rascouet in Paris on the LVMH numbers, earnings, and what we've been hearing from Bernard Arnault as well, the comparison between the US and France. Here's what else we'll be thinking out for the day ahead. It's a busy day for you. 8:30 a.m. UK time, Riksbank decision comes through. That Central Bank of Sweden expected by the markets to cut interest rates again to 2.25%, so watch for that. And then after market, of course, a mammoth day for the earnings story out of the US with that focus and lens on technology. Meta, Tesla, Microsoft and IBM all reporting. We will have full coverage, of course, throughout the day. 7 p.m. UK time, meanwhile, on the macro front, it is the FOMC rate decision. Arguably, it is the commentary from Jay Powell at the press conference that will be more interesting. Will he keep the door open to potentially March, as markets price in now a full 2 rate cuts through this year? Coming up, a judge blocks President Trump's plan to freeze federal grants and loans after a day of chaos. We bring you the details next. And over the next 2 days, we're going to be live at the IPEM conference in Cannes, speaking to top industry players about their outlook for private equity this year. Guests include leaders at KKR, Ardian, Eurizeo and Apollo. And later in the show, we're going to bring you an interview with Frederic Giovansili, Tikehau's deputy CEO at IPEM Cannes. Stay tuned for that interview. It's coming up this hour. This is Bloomberg. Welcome back. Happy Wednesday. Now, a federal judge has temporarily blocked the Trump administration from enforcing a directive to halt payments of federal grants and loans, which sparked panic in Washington. The White House defended the new measures.
Again, I would say this is not a ban. This is a temporary pause and a freeze to ensure that all of the money going out from Washington, D.C. is in line with the president's agenda. And as the Office of Management and Budget has updates on what will be kickstarted once again, I will provide those to you.
OK, for more, let's bring in Bloomberg senior editor Derek Wallbank. Chaos in Washington didn't take long, Derek. These things seem to go hand in hand with the Trump administration. Seems to thrive on it, partly by design, partly by missteps, depending on how you look at it. What do we know about it? We had a debate this morning in the newsroom. Why should we care here in Europe about this? I know that you're going to remind us why we should care. What do we know about this initiative and what's been rippling through Washington?
Tom, my friend, set me an easier challenge. Look, we're talking here about a ton of money that goes to propping up basically everything in government, from state to local, and a lot of international aid as well, right? You're talking somewhere in the neighborhood of maybe 8 to 11% of the budgets for some major cities, large portion of state budgets. There are some places where 40% of healthcare spending is done via Medicaid. It's a program for low-income individuals, and there were some places that were saying they couldn't draw out of Medicaid. Why? Because regardless of kind of where the intent of this order was, you were talking about downstream mid-level bureaucrats trying to figure out the edges of the Trump administration's decree. Now, the White House later pulled this back a little bit, and we've seen Marco Rubio say that they're going to have some exemptions for some of the foreign aid grants, but there really is a lot of question regarding spending that the U.S. might do. Now, a federal judge did come in and stay a lot of this order. Basically said, no, we're gonna keep this going now, but I want to have some arguments come in later. So that'll be something that we'll have to watch coming up next week and beyond. There will be a lot of court action here. But, you know, look, if you're sort of looking around the world, you're seeing a lot of people say, hold on a second, is our money still coming? You have partners all around the world, from Ukraine to Taiwan, going, hold on, are we okay? Yeah, we think we're okay. Are we sure we're okay? And then having to ask those questions, right? And so that's what you're getting into. A lot of this stuff, remember, the baseline of the United States as it comes to international markets across everything is reliability, right? Why are treasuries par? Because they're reliable, because they're always going to happen. Anytime that you mess with U.S. reliability, you mess with that underlying foundational consensus. And Trump's made no bones about it. He's in to shake things up. He wants to do things differently, right? And that's all fine. But when you start getting into these questions of where is the edge of this order, that's when you get into some of this chaos that we saw throughout Washington in our overnight period.
And that is why we value the deep expertise of our Bloomberg senior editor, Derek Wallbank, on all things US, the policy making coming through from the Trump administration, and the global reverberations. Derek, thank you very much indeed for the breakdown on what is transpiring in Washington right now around those funding shocks. Now, Bloomberg has launched Trumponomics, staying on this topic, a newly released weekly podcast focused on the Trump administration's economic plans and policies. Stephanie Flanders will be joined each Wednesday by reporters and guests from Washington, D.C., Wall Street and beyond. So do download that and listen. Coming up, the EU's new finance chief says the bloc needs to have simple and better regulation when it comes to big banks. We will have more from that exclusive interview next. This is Bloomberg.
Banking union, it is a natural consequence of banking union to see cross-border mergers. We have the decisions are, according to the banking union rules, decisions are made for prudential reasons by the ECB, also assessed for competition reasons by DG Competition, and those are the rules. If they agree that the merger can go on, then all which is necessary under the banking union is complied with. The issue is that we need to understand that bigger banks can provide better services at lower cost. And we do understand that issue of scale. If people go to big supermarkets, why? Because they have wider offers at lower prices. It's the same with banking. If we have bigger banks operating cross-border, it will be to the benefit of all clients. They will have more services being offered at lower cost. That is the drive for banking union. The banking union does allow or promote that kind of movement.
I'd also like to get your perspective on something that's also happening quite some distance from Europe, which is in the United States with the Trump administration, which has taken a very sort of slash and burn approach, shall we say, to regulation, particularly in financial services. One of the great critiques within Europe is that it is overregulated. Even the Draghi report highlighted that something like 10% of GDP is lost due to over-regulation. Is that something you're going to have to look at in financial services in order to, particularly in an environment where the Trump administration is rolling back a lot of regulation? Does Europe need to deregulate on financial services?
I do not use deregulation, and I do not like the expression deregulation, because to me that brings back concerns about financial stability, and financial stability is a precondition for success. No matter what you want to do, you need to maintain financial stability. But there is clearly a need to have better regulation, simpler regulation, to reduce the burden that it imposes on companies. Actually, all commissioners have that on their mission letters, so we should all focus on how to reduce the burden of regulation and make it more fit for purpose. So we need to simplify, not to deregulate.
And that was Maria Louis Albuquerque, the EU's Financial Services Commissioner, speaking exclusively to Bloomberg's Oliver Crook. We have some breaking lines from Volvo Trucks, that company coming through with a fourth quarter miss, adjusted operating profit of 14.04 billion Swedish krona. The estimates have been for 14.5 billion, so a miss for a company whose stock is up about 19% over 12 months. Plenty more coming up. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Shares gain in Asia after tech stocks rebound from the sell-off that roiled global markets. Traders turn their focus to today's Fed decision, looking for clues on a rate cut in March. ASML'S fourth quarter bookings smashed through estimates as the AI boom drives demand for its advanced chip-making machines. And seeking deep answers on DeepSeek, Bloomberg learns Microsoft and OpenAI are investigating whether the Chinese startup obtained OpenAI data without permission. We bring you our scoop. It is, of course, a massive day for earnings as well. European numbers coming through from ASML, and then we switch focus to the picture on the Mag 7 with Meta, Microsoft and Tesla all reporting later today. Arguably, the tech earnings more important than the Fed, but that depends on what Jay Powell has to say at that press conference. European futures pointing to a very solid start. Risk on, ASML helping the sentiment and the turnaround in the views on AI. The gains that came through yesterday on Wall Street powering the upside for European stocks that notched a fresh record yesterday. Looking to build on that significantly today with futures pointing higher by 0.8%. The FTSE 100, though, looking a little more demure, currently flat as things stand. S&P futures looking to add 0.2% after rallying 0.9% yesterday. NASDAQ 100 futures closing up 1.6% by the close, looking to add 0.4%, with a focus squarely on the earnings numbers. Let's flip the board and look cross-asset then, if you want a gauge of the sensitivity around the Fed, as markets price in a full 2 cuts by the end of this year. Look at the Treasury curve. The benchmark 10-year currently 4.52. Not a lot of movement, but that, of course, could adjust during the press conference. That is the 10-year. Euro-dollar at 1.04. There's a build-out of views that the ECB is going to have to do more, particularly if tariffs come from the Trump administration. Markets currently pricing in just around 90 basis points of cuts by the end of this year for the European Central Bank. Euro-dollar currently up 0.1%. Will that modest strength be sustained? Brent at $77 a barrel, down 0.1%, and gold currently off by 0.1%. Let's get more details in terms of the earnings story, this time from the spirits maker over in France, Rémy Cointreau. They are seeing third quarter revenue coming in above estimates. It's a beat in the third quarter for Rémy Cointreau, 254 million euros. The estimates had been for 244. The cognac maker, of course, coming in with organic revenue that contracted at 21.5%, but that was a less severe contraction than had been estimated. So that is the earnings from that cognac maker. But let's get back to a more important stock. Objectively, ASML, fourth quarter earnings, smashing estimates amid an AI boom. European stock futures jumping on the better than expected numbers. Let's get the details with Bloomberg's Charlotte Hughes-Morgan, who is in Amsterdam for us. Charlotte, what stood out to you from these numbers?
Well, Tom, I mean, it's really a beat across the board for ASML in this quarter. You've got CEO coming out and saying, record year, record quarter, and what will be kind of relief for investors who are really shaken by Monday's sell-off is that ASML really doubling down on this AI story. I mean, looking at some of the remarks, the CEO of ASML saying, that AI is really the driver of their kind of bookings beat for this quarter. We saw net bookings over 7 billion euros, and 3 billion of that was for ASML's EUV machines, which are the cutting-edge lithography machines used to create the highest tech chips that are powering AI. So you've really got ASML saying, this is where the opportunity is. We expect demand to stay really strong. They kept their 2025 net sales guidance unchanged, and saying, there's real opportunity given this kind of strong demand for AI at the top of the range. So, some relief for investors who are kind of shaken by the sell-off earlier on Monday.
Yeah, that 3 billion number for the EUVs is pretty remarkable, isn't it, given that some analysts had expected 1 billion for that number. We've heard TSMC, they've upgraded their guidance around CapEx spend. They are, of course, a major buyer of these EUVs and lithography machines from ASML. On the China question, I mean, Christophe Fouquet, the team there have been talking about this for some time, the fact that they've had to make up for a shortfall of orders in the last couple of years. That's starting to come to an end. What is the China part of the piece of the pie, do you think, for ASML going forward? How much clarity do we have on that now?
So this was interesting. Looking through these initial numbers, we see that sales this quarter are down to sales to China down to about 27% of ASML sales, and they were nearly half of sales in the previous quarter. So we really see the kind of feed through of the pressure, the export restrictions coming from the US to are having an impact on ASML's sales to China. I mean, earlier this week you had the Dutch Prime Minister saying we expect the Trump administration to keep pushing on those export restrictions and keep exerting pressure on ASML to really, slow down sales to China in the interests of national security. And this quarter we see that big drop off. So that was something that stood out for us, and is definitely something that investors will be watching.
OK, excellent breakdown of the results from ASML, a crucial stock to watch for you this morning. Bloomberg's Charlotte Hughes Morgan in Amsterdam, thank you. To the UK now, where Prime Minister Keir Starmer says the economy is starting to turn around. Is it? And growth is his government's top priority. Well, we know that. He spoke with the chief executive officers of some of Britain's biggest firms right here at Bloomberg's European HQ.
Well, the number one priority of this Labour government is growth. And by that I mean wealth creation. And that's why what you've seen in recent days is a number of announcements about how we're going to strip away regulation, strip away the inhibition of planning, use AI to take us forward. And so today we've had the opportunity across a number of sectors to have a really good discussion about how much further we can go. But the number one mission is wealth creation. We have to get our economy working. I think we're beginning to see how that's turning around, and we'll build on that as we go forward.
The Prime Minister, Keir Starmer, speaking to Bloomberg here at, of course, our European headquarters yesterday. And his vision, of course, is matched by the vision of Chancellor Rachel Reeves, and she's going to expand on that in a speech today. She's going to pledge to go further and faster to boost the UK economy by unlocking new infrastructure projects, something the team have been reporting on. With analysis and a preview, our UK correspondent Lindsay joins us on set, around the table, of course. What can we expect? If this was a government that was in a deep slumber about the need for growth, as some would suggest, then they seem to have woken up from that slumber. Announcement after announcement, speech after speech, and they seem now to be determined to shake things up when it comes to the growth picture. Rachel Reeves looking to build on that today.
Yeah, I would say that this pivot started really in Davos with Rachel Reeves' interview with our editor-in-chief, John Micklethwaite. I was talking, though, to the former boss of Tesco yesterday, Dave Lewis, and he was saying it's all very well to talk about growth, but you can't talk your way to growth. You can't just say something. And actually, if you look at the policies Labour have implemented so far and the data, the tax rises on business in the October budget have already weighed on the economy. So you've got private sector activity stagnating, public sector borrowing overshooting forecasts, jobs cut at the fastest pace since the financial crisis. Sainsbury's last week saying they're cutting 3,000 roles. You've got an exodus of millionaires because of the non-dom rules, and not to mention those 2 bouts of market turmoil. So the data actually looking pretty glum. What business wants is policy to match that ambition that you heard from Keir Starmer, and Reeves were expecting today to say growth will not come without a fight. So what does that mean? We've already reported that we're expecting her to announce there will be approval of a third runway at Heathrow. So the fight would come on the climate, within her own cabinet as well, but also perhaps from business. And you were, of course, speaking to Neil Sorahan, the CFO of Ryanair. Let's just remind viewers of what he said to you yesterday.
We'd be very keen to see more growth, very keen to see more capacity, but I do feel that the plan to add capacity while at the same time putting up air passenger taxes is kind of contradictory. If you really want airlines to grow in the UK, then you need to bring down the taxes on the passengers arriving and leaving from the country. So I would call on the government, first and foremost, reduce APD and then start looking at the CapEx.
So it's not going to come easily, but growth is the holy grail, even if it takes a while to achieve it. But they've got to go for it, given the status quo they know isn't going to compete with Donald Trump's America.
Lizzie Burden, thank you very much indeed. A preview of what to hear and what to expect from the Chancellor, Rachel Reeves, who will be speaking later today. Lizzie Burden covering all of that for us, our UK correspondent. Let's dive deeper into the UK markets now. Very pleased to say I'm joined by Lindsay James, investment strategist at Quilter Investors. Lindsay, there's a lot to unpack. Let's start with the UK then. How do you and the team? Good morning. How do you and the team at Quilter think about UK assets, UK equities at this point? Whether it's the kind of domestically focused businesses on expectations that maybe the BOE is going to cut more than markets expect, or indeed those internationally exposed FTSE 100 names. Is there anything you want to be adding when it comes to UK stocks at this point?
I think, we have to separate, first of all, a very challenging backdrop in the short term. We're mindful of the weak surveys that we've seen in recent weeks, the rise in unemployment figures, comments from the likes of AB Foods with Primark, Marks and Spencer's about their caution for the year ahead. But we also have to balance that with a longer term view, and we do take that longer term view. And in the UK, we've got a significant productivity gap still, not just with the US, but also with the likes of France and Germany. And we get some encouragement from some of the moves this government are talking about at this moment to try and boost that level of productivity. And then we also had projections out from the ONS yesterday, which I think really upset the apple cart, because they actually projected that the working age population in this country would grow at about 9.5% between now and 2032. Now, that is not conventional wisdom at all. If you read any economist's report, we have a demographics problem. So, I think we have to think firstly about, yes, it's difficult in the short term. There are few arguments for the UK at the moment. But if we can look ahead 3, 4, 5 years, there's still some optimism there that this can actually change.
OK, still some optimism. What assumptions are you making about the Bank of England? Traders pricing in 70 basis points. Do we get below 4% by the end of the year?
I think, that's sort of quite a big move. I think in the UK, we have got the problem that, we've still got very sticky inflation. We've seen no real change to that at the moment. That's coming from a jobs market where we've had labour shortages. Now, there are signs, of course, that that's turning around. And if that does, that will be absolutely crucial to seeing rates coming down further. But I think we'd have to see that data coming through before we have more conviction on it. So we're going to watch and learn on that one. But, we're looking at the US, I think, with very few rate cuts coming through, the UK having to mirror that to some degree because of our currency pressures. We're being a little bit more cautious than some of the investment banks out there talking about 4, 5, 6 cuts in the next 12 months.
Has DeepSeek, talking of the US, has DeepSeek and what we've seen in terms of the innovations out of China, has that changed your AI thesis?
I think it's certainly called into question, looking ahead, how much these companies need to spend. But we've generally been more cautious towards the Magnificent Seven when we've been adding to the US in recent months. We've generally, across portfolios, been looking more at the equal-weighted S&P index rather than buying the overall index. We've also generally been looking at things like small mid-cap in the US as well. So it wasn't an area where we were particularly bullish in any case. We were concerned a little bit about the earnings expectations that were baked into those stocks, the valuations. So it hasn't really changed it in that respect. But I think what it does teach us is that, these companies in the US don't need to spend the same amounts as were previously assumed. Now, that you could argue that that's a bullish case, they can get more for less. And you can also argue, of course, this increases the ramp up of AI usage and will increase demand for chips in the long run. But I think in the short term, until we hear more, until we hear how DeepSeek really did build this model, whether they used competitors' knowledge to some degree, which it sounds increasingly like that was a part of it, I think we have to consider that maybe there isn't going to be a big rebound.
OK, maybe look for the breadth beyond Mag 7 when it comes to the US, with earnings, of course, front and centre for us today. Lindsay James, investment strategist at Quilter Investors, thank you. Coming up, we're going to be live on the ground at the EPEM Private Equity Conference in Cannes. Kriti Gupta with a really great guest, so stay tuned for that conversation. There's plenty more coming up. Stay with us.
This is a fascinating conversation, Tom. We're in the best location, trillions of dollars being put to work in the private markets and the wealth markets. We're going to have it covered. This is Bloomberg.
Happy Wednesday now. After 2 years of falling deal values, 2024 saw capital markets warming up. Yes, it did. But a second Donald Trump presidency and changing government policy in Europe could temper or turbocharge the recovery. Cheaper borrowing costs and strong equity markets have given some companies the confidence and capital to pursue deals, with private equity firms reopening their checkbooks to hunt for bargains in the public markets. Opening trade anchor Kriti Gupta, who understands this better than anyone else, is on the ground for us live at the EPEM Cannes event with Tikehau Capital, a global alternative asset manager with nearly $50 billion under management. Kriti.
Tom, thank you. This is one of the biggest players in Europe. Before we get to him, and I just want to really highlight how much is at stake here. We're looking at a very tough geopolitical environment, a tricky interest rate environment, and there are trillions of dollars really wrapped up in these private markets that are just starting to make its way to the public markets. We'll see, of course, if that continues. And as you mentioned, we are here with Tikehau Capital. Frederic Giovansili, the Deputy CEO of Tikehau, joins me right here. Pleasure to have you on the program. Thank you so much for joining me. We were just talking about this deal-making kind of ability here. So many geopolitics at play, so many different factors. Does that help or hinder the case for private markets right now?
Look, first of all, I mean, the deal-making activity has been picking up, especially the second half of this year, and we expect the deal-making activity to being strong going forward. Yes, you mentioned the interest rate environment and the pent-up demand as well, and the backlog of transactions. So yes, we will see some bifurcation and dispersion of valuation metrics going forward. So the volume will increase, but the valuation metrics will be very diverse in terms of activities. Especially against the backdrop we just mentioned, long-term interest rates still going up, and the backlog of activities that is massive as well to deal with. So we're very excited, but we're still very cautious about how to implement this kind of activity.
Well, Frederic, you and I are here in this beautiful setting. I think we both got the best assignments from our respective workplaces. Nice. It's very lovely. But I would say that's perhaps not as lovely as the deal-making environment in the States right now. This divergence you're seeing between the States and Europe seems to only be getting bigger, especially after the election of Donald Trump and his deregulatory agenda. Does Europe benefit from that? Is there a spillover effect, or does Europe have still a lot of catching up to do?
Yes, right. I mean, there is this kind of mood today where you have this American exceptionalism and the European pessimism, right? I mean, that's definitely the headline we keep hearing, the music we keep hearing. If you zoom in and you drill in, most of European companies actually are global companies, right? So they're exposed to the US, they're exposed to Asia as well, so they're very much global. So I'm not sure you can really oppose Europe and the US. Also, Europe has, still needs to find this economic compass and the growth focus. But it's also fair to say that there are a lot of strengths in the system, right? I mean, public spending is very strong, global companies, a lot of privately owned companies, entrepreneur-owned companies that are very large growth opportunities ahead of them as well.
There are two key sectors, though, in respect to on both sides of the Atlantic that I think both in the public markets and the private markets have gotten quite a bit of attention. AI and defense. Every time you say those words, everyone's ears kind of perk up. Now, we know that Tikehau is a major player in the defense investment space in the private markets. Is this a space where you have to have scale to excel?
So first of all, we've been active for more than a decade, so it's not a new development, it's not a trendy development, right? We've been very much active. Defense and aeronautics actually is a very interesting value creation sector. A lot of suppliers, so consolidation, modernization of the manufacturing capabilities, intellectual properties. So there is a lot of value in this system, right? And right now, a lot of visibility about their contract. I mean, some of these companies have more than 15 years of visibility, so it's not so much government dependent, by the way, right? So there is a lot of visibility in the system, a lot of value creation and transition to decarbonization as well, which is part of the thematic we're tackling in this environment as well.
Some would argue, though, that despite those kind of 15-year contracts, that there is still that volatility in the geopolitical space in terms of the depth and the extent that affects some of the valuations. For example, a second Trump presidency might mean even more defense spending, in the States than previously. How do you do the math on that, given that the geopolitics itself are changing so rapidly, especially as we still have two major wars raging in this region alone?
As I said, I think it's not so much government dependent because of the long-term trends that you're facing. yes, higher tariff and more defense spending will impact the sector in particular. I mean, across the board, but this sector in particular. But we don't believe it's going to be so much dependent on the geopolitical in the short term. It's long-term trends. We are long-term players. We invest patient capital into this long-term trend, and it's definitely a long-term trend. So yes, you might have some bumps on the road and some volatility, but the long-term, and we saw that during the COVID, right? We've been very active during COVID. A lot of volatility in valuation. Good entry point as well, to be fair.
Yeah.
So yes, there have been some volatility in the sector. I mean, aeronautics during COVID has been moving a lot, right?
So very quickly, we got to wrap this question up with, we started this interview talking about a pickup in deal making.
Yes.
In 2025, what hinders that progress?
So I think we need to keep an eye on interest rates. Not so much on the short end of the curve, but the long end of the curve. So that's still, with all this government spending, we expect the curve to steepen. So it will definitely have some impact on the valuation. And yes, as well, the amount of companies out there and the supply and demand will also have an impact on this valuation. So we need to be mindful of that. So the activities, the volume will increase, but you have some large difference. Yesterday we mentioned that before the interview, right? I mean, Golden Goose, Permira has been trying to IPO the company 6 months ago, pull out the IPO and got a better pricing in a bilateral sale. So we will see this kind of activities across the different market, IPOs, M&A, and also secondary.
It's fascinating. We're seeing the geopolitics and the private markets, which are supposed to be insulated from it, all wrapped up together. Frederic Giovansili joining me right here in Cannes, the Deputy CEO of Tikehau. Tom.
Kriti, great interview, and what a lovely backdrop as well. Kriti Gupta, plenty more interviews coming through from EPEM and Kriti Gupta through the next few hours. And there's more from us as well in the next couple of minutes. Stay with us. We're going to give you a preview of those tech earnings. This is Bloomberg. Three of the Mag 7 reporting later today. This is the story that's going to be illustrated across the Mag 7 earnings if the analysts are right, which is the growth will be there but is slowing from previous quarters. This is the Microsoft story, expected to see growth of about 11%, about $70 billion in terms of sales. The scrutiny will be on Azure, it will be on Copilot, it will be on the AI products that they are shipping and to what extent they're seeing traction and upside for that. Let's flip the board and have a look at what to expect from Meta. This stock, by the way, up about 70% over the last 12 months. Largely unaffected Meta by what we've seen from DeepSeek. In some respects, it actually justifies their open source model. We're going to be focused on what they see in terms of products, but also, of course, to what extent AI is powering things like the ad sales for Meta. That's going to be important. Let's flip the board and look at Tesla. That stock up about 110% in the last 12 months. Well, the lower cost model, the cheaper model, is that going to come through for Musk? They shipped fewer cars last year than the year before. And what are they doing on the robo-taxi? All those things will be in focus. The earnings, of course, later today. The opening trade, though, is up next. This is Bloomberg.